Good afternoon. Let's do some business. We are doing it live right here and doing more at 4 weekday afternoons. We get right down to business right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. It's Mottek On Money, live on the air right now on 790 KBC, streaming live online worldwide for you at kbc.com and the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. Big day today, stocks closing mostly higher. In fact, another record-shattering day for the NASDAQ and the S&P 500, while the Dow pulled back. All of this, a well-fed rally today. We heard from Fed Chairman Jerome Powell and got the statement on the economy and interest rates from the Federal Reserve. They did hold the line on short-term rates, keeping them right where they've been for some time at 20-plus year highs. The market was helped by a softer-than-expected consumer price index reading that came out first thing this morning and signs that the Fed could start to cut interest rates sometime this year. The Dow, though, down, finishing lower for the third time in the past 4 trading sessions after the Fed policymakers penciled in just 1 quarter-point rate cut for this year, and that's down from 3 rate cuts that was seen in the estimate back in March. The Dow coming in for a closing loss of 35 points. The S&P 500 moving up 46 for its 28th record close of the year, and the NASDAQ popped 265 points higher for another record high close, the 16th record high close of 2024. Shares of Apple moving up again today to a new all-time high, up nearly $6 at $213 and change. And yes, NVIDIA was in on today's rally, up more than $4 at $125 and change. That stock recently saw a 10-for-1 stock split. Fed Chairman Jerome Powell taking the spotlight after the Fed announcement came out at 11 o'clock this morning. He was pressed on the potential timing of rate cuts at his news conference, but did not offer much guidance. Closer to home, shares of Virgin Galactic Holdings plunging more than 13% today in extended trading this afternoon after that space tourism company announced a reverse stock split, a 1-for-20 reverse stock split, and it looks like Virgin Galactic shares down about at least 5%, down more than 13% here in after-hours trading. Looks like they closed down 5% on the day. Virgin Galactic says the reverse stock split is expected to become effective at 5 p.m. Eastern on June 14th after close of trading on the New York Stock Exchange. Meme stocks getting attention lately. A sell-off in GameStop shares today, corresponding with a surge in volume for call options, believed to be owned by Keith Gill, better known by his handle Roaring Kitty on social media. We see GameStop shares down more than $5 today at 25 and change. Honoring the memory of the great Jerry West, the NBA great who died today at the age of 86. Of course, he was also a major player on the business scene here in Southern California. Saw him many times in Beverly Hills and at some wonderful events where he was the keynote speaker at various business conferences, including the LA Business Journal CEO conference over the years. We honor the memory of the late, great Jerry West, who's died today at the age of 86. Crime continues to be a big issue for businesses and everyone here in Southern California. An effort to repeal Prop 47 in Sacramento is now under attack. I'll discuss that later this hour with State Senator Janet Nguyen, who will be joining me live. The U.S. now weighing more possible sanctions for China's access to chips needed for artificial intelligence. I'll discuss that and more on China issues this afternoon with China expert Gordon Chang, who will be joining me live later this hour. But first, on the big record-shattering day on Wall Street, the Fed's latest statement, the Fed chairman's comments, the new reading on inflation, and the whole works this afternoon. Joining us live now, Ken WINANS, money manager and president of WINANS Investments, market historian, author of Investment Atlas 1 and 2, also Forbes magazine contributor. Ken WINANS, thank you very much for taking the call on this big day, and give us your reaction to all this big news here today. All right, we hope to have Ken WINANS on the line here shortly. As I mentioned, shares of Virgin Galactic Holdings in the spotlight this afternoon, down more than 13% in extended trading after that space tourism company announced a reverse stock split. Let's try to pull up some more information about that now. The reverse stock split was approved by the company's shareholders at Virgin Galactic's annual meeting today. The company's board then approved the reverse stock split at a ratio of 1-for-20. According to MarketWatch, the The Virgin Galactic folks said the reverse stock split is expected to become effective on June 14th after the close of trading on the New York Stock Exchange, and the company's common stock is expected to start trading on a split-adjusted basis when the market opens on June 17th, trading under the existing ticker symbol SPCE. The statement says the primary goal of the reverse stock split is to increase the per-share market price of the company's common stock to meet the minimum per-share bid price requirement for continued listing on the New York Stock Exchange. Virgin Galactic went on to say, as a result of the reverse stock split, every 20 shares of the company's common stock issued and outstanding will be automatically reclassified into one new share of the company's common stock. I believe we have Ken Winans on the line with us now. Ken, good afternoon to you, sir.
Hey, Frank, how are you today?
Fantastic. Big news day here today. I was just mentioning the Virgin Galactic news, a 20-for-1 stock split, reverse stock split. They announced that after the closing bell here today. But obviously with the Fed in focus and that inflation reading out this afternoon, give us your reaction to all the big news here today.
Well, like most people in my position, I'm watching it very closely. And it was interesting that we were ecstatic about the consumer price index coming in a little bit lower, but a little bit lower is not necessarily meaning that we won the inflation war. And that's why the Federal Reserve basically said, instead of the much anticipated 3 rate cuts for the year, we might, and a key word, might cut rates once in 2024. I think, again, that they're cognizant of the fact it's a political year. There's still tremendous crosswinds out there economically of what's going on. And we have to remember, we focus a lot on this show about what happens in this country, but when you look at what's going on around the world, there's definitely a decoupling of monetary policies going on at various countries. For instance, the European Union is going to cut rates. There's a lot of people believing that is going to cause big problems with currency imbalances, and certainly that we're no longer all trying to fight the same war. Those are issues. And by the way, this all happened in the 1970s. Very contentious about everybody trying to defend their own currencies. So we're going to have more of this as we go through the rest of the year. But what I think is more important, and we as investors need to watch this, is how do the individual investments handle the news like today? And there's a lot of companies that went up. Obviously, the S&P hit a new high. NASDAQ went up. There are those companies that have figured out how to deal with this inflationary environment, and those that are clearly struggling, and we're going to talk about it later. But again, we should just be prepared. It's going to be this way for the rest of the year, and it's just what it is.
On the air live with money manager Ken Winans, and it should be noted the consumer price index this morning held steady in May, though it increased 3.3% from a year ago. Both numbers were 0.1 percentage points below market expectations, but stripping out food and energy, the so-called core CPI index increased 0.2% of the month and 3.4% from a year ago, compared with the estimates of 0.3 and 3.5%. So inflation is still running hotter than where the Fed wants it. And I remember talking to a prominent economist some years ago about this core rate, which he called a canard. Of course, everyone is affected by food and energy, and but that number gets a lot of attention when this CPI report comes out, and of course the way inflation is even calculated has come under suspicion given the tremendous spike we've seen in so many things, and most notably housing. Ken, what are your thoughts on how inflation is measured these days, and where do you see inflation go from here?
Well, I call it it's a very interesting economic tautology, meaning you're kind of chasing your tail, because when they exclude food and energy affects all the other commodities that they're keeping in this index. So I don't see how you can strip it out. The intent of not including them, and it is a fair assessment, that, energy and food prices do swing dramatically month to month. As you know, I track commodities very closely. I see it all the time. The commodity markets right now are swinging like yo-yos all over the place because of the inflation thing. But Frank, the bigger issue with the inflation numbers, it's kind of like when you talk about housing numbers in the United States. We are regionally a very vastly different country. You take California versus Vermont, they're vastly different. And I think I could fairly state the states that have higher government regulation, higher taxes, on goods and services, i.e. California, the inflation rate is going to run higher there than it's going to be in states such as Nevada, Utah, Arizona. So you have to be very careful on just saying that one number hits it all. I think what we can honestly say, though, is we all know prices are continuing to go up. It's affecting everybody, rich and poor alike. Everybody has the same situation. But, again, we know that inflation, that this is going to be multi-year battle to ever completely get rid of this, if we ever can. And that's assuming that everybody in Washington is on board with this, like they had to be in the late 70s and early 80s. And as we all know right now, in an election year, we're nowhere near that.
On there live with money manager Ken WINANS on crypto. Ken, a lot of people are following it, and it's interesting to note the NASDAQ is at a record high, but Bitcoin is not at a record high. It did hit a record high, a couple months ago, up more than 600 now at 68,100 or so. What are your thoughts on how the cryptos are performing lately?
With the fact that crypto's rally has affected, I'm going to say it's stalled. It hasn't died. It hasn't reversed trends, but it is stalled. In our world, we call it's consolidating its gains. What I can tell you is when I talk to people who have crypto in their portfolios, there's a general sense of diversification. They want to take advantage of some of the other, certainly anything that's in the crypto world that's broadening out. The volumes are getting better. They're becoming more popular, most notably stable type coins. People are really eyeing those things more. And I think that the general sense of just not understanding the halving of Bitcoin and the fact that it's even being talked about, that people who are knowledgeable in crypto really are having trouble explaining it to crypto holders. So until that clears itself out, I think it's going to be more of the same. I'm very much watching what's going on with Ethereum. It is, for a long time, it always seemed to like Bitcoin. It's even with Bitcoin on the year. It's up about 61% on the year. I just find more and more people are, again, looking at alternatives. A couple of times I said, I treat it like all the other commodities. I'm watching it very closely, but there is definitely a shifting within the asset category.
All right. The observation has been made that it seems to track the NASDAQ, talking about Bitcoin here now, and with NASDAQ at an all-time high above 17,600 here, Bitcoin below its all-time high. What are your thoughts about these correlations or no correlations?
Well, I actually do think that cryptos in general do seem to track the tech sector. It's eerie how close they do track it, but not every single day in and day out. I find in my analysis, it's not even month to month, Frank. It's more quarter to quarter. And in fact, when I finally get settled in, I got to finish my new Forbes article. It's on this topic, but it is generally in the same trend. I think the lesson to be learned with crypto is we're all beginning to figure out whether you invest in it or not, hate it or love it, you need to understand it. And the simple fact is it does not act like a currency. It doesn't act anything remotely like the dollar. It doesn't act like gold or silver, other keepers of value. It is, in fact, its own thing. And right now, as we're trying to find relationships and comparisons, it seems to track well with NASDAQ, and I have no reason to believe that will stop. But, Frank, I wanted to briefly talk about a couple of things that are kind of interesting that over this weekend, and I think this is also caught in the news cycle, in addition to what's going on with the Federal Reserve. I was at the Trump rally in Las Vegas. I was actually at a dinner party, and I was there. And it was just interesting hearing the former president talking about his economic agenda. And it was very clear that, and again, themes that I think we all have to begin to think about. There are distinctly going to be different industries that do better, and they're already beginning to move right now. What I'm going to call the Trump stocks, and I'll throw out a couple of names because he specifically talked about these groups. But then also, although gold and silver have pulled back, I do find that most people are underweighted in those asset categories. It might not be a bad time to look at buying those because I think that the underpinnings of why to own those metals is still intact. But again, the political gravitational pull that we're going to begin to see all through the rest of this election cycle is going to begin to tug at individual stocks, and people need to start making adjustments to their portfolios. I just know that in 2016, when he won his election against Hillary Clinton. There were a lot of money managers that were caught off guard. They had the Clinton stocks, and they had to radically shift that November. I would just suggest that everybody now needs to get ahead of the curve.
Very important point, and thanks for mentioning that. And going back to 2016, I remember MarketWatch had a write-up about the various scenarios, what could happen with the presidency, with Congress and the Senate and so forth, and how the market might react. And the scenario that ultimately happened in 2016 was at the bottom of those scenarios, the least likely scenario, according to that MarketWatch article at that time, which I'll never forget. I remember we saw that big plunge there the night of the election, then, of course, a dramatic turnaround, and the stock market took off from there. On the air live with money manager Ken WINANS. Getting back to cryptos here for just a moment, of course, we did see Bitcoin hit a record high this year, and then we're getting all of these outlandish predictions on where it might go, astronomical predictions. And as far as reliable analysis is concerned regarding cryptos, Ken, especially Bitcoin, obviously we are very interested in hearing your analysis here now that you have this certification on the cryptos. But what about reliable analysis overall in the crypto space?
Well, I'm a technician. I follow the charts, and I follow, meaning trend is your friend, and you follow where prices go. Here's the way I look at it. Right now, Bitcoin is roughly about 9% above its 200-day moving average. So I track it just like I would the S&P 500, the NASDAQ, and that indicator, the 200-day moving average, is basically the definition that we use in our business as an uptrend or a downtrend. So it's still in an uptrend. Right now, Ethereum is about 11% above its 200-day. So right now, the key point I would look at, if you have Bitcoin break 64,000, that might be a concern to a lot of people. That's where a lot of the machines might start systematically selling it or trying to do whatever they're going to do to it. Ethereum is about 3327. So there's still room. I just think that consolidation is not a bad thing. If anything, it's good because it does get some of the froth out of these investments and go from there. The other thing about crypto, and it missed the news cycle quite a bit today, but I do find it very interesting that former President Trump met with some of the crypto miners. So before he was very iffy about crypto, he's beginning to embrace it or at least learn about it. So I don't think there's going to be, in the case of changes of administration, I don't think there's going to be pro or con any effect on crypto, or it's going to be any con. I think there's nothing but pros from that standpoint. But I will just also finish on this note. That there's still concerns. And when I talk about it, I think, again, it's a broad statement that I just think people need to learn about it. If you want to dabble in it, certainly there are exchange-traded funds. But again, it's a very, very volatile asset class. It's going to move around a lot like a commodity future. So I would just suggest people, if they're going to do it, start small, get used to it, get comfortable with its volatility, and decide if it fits for you. It's not for everybody, but certainly it's worthy of learning more about it.
Excellent, and we appreciate that. We talk to the crypto biggest fans as well as the harshest critics here, and certainly don't get swept up in all the hysteria that you often hear, especially when it moves on the upside, and when it moves up as well as down. At this point, Ken WINANS, where are you putting money now and/or taking it off the table?
Well, I'm glad you asked me that question because I tell you what, it was interesting hearing former President Trump talking about what he liked and didn't like. He spent a lot of time making fun of the EV trucks. He talked a lot about how important transportation is in our country, and he kept saying, these trucks can go across the country. We're talking about conventional freight-moving trucks, and so it's very, very clear that if he's elected president, he's going to remove a lot of these mandates, especially on trucking. So if you're trying to, excuse my French, Trumpize your portfolio, you might want to take a look at some of these heavy equipment-type companies. 4 that I'll look at, and by the way, they all did very well today. First one, Paycar, PCAR. Second one, Cummins, CMI. Good old-fashioned Caterpillar, Dow Industrial Average Stocks, CAT. And last but not least, Federal Signal, FSS. Again, these are all conventional truck companies that are, let's face it, it's difficult converting a diesel truck that has to carry heavy loads, same as it is with locomotives. It's hard to EV these things. So again,
Yep.
He brought it up that this is a very important thing. Last but not least, home building. He's very concerned about the cost of housing. He was talking about remedies for it. So I stay with my pick of Hovnanian, Lennar, and Pulte Homes. And most people are way underweighted in their real estate, in their stock portfolios in real estate.
Ken Winans, thank you very much for taking the call here. And it should be noted almost 40% of U.S. EV buyers want to go back to combustion engine cars. That according to a McKinsey study that was released today. So we'll note that as well. Ken, thank you very much for taking the call here. Ken Winans, money manager and president of Winans Investments, market historian, author of Investment Atlas 1 and 2, also Forbes magazine contributor. We'll be looking forward to your next article. Ken, thank you very much for taking the call here today.
Thank you, Frank. Have a good night.
You tune out. Let's get right out to the freeways on 790 KBC. Mottek On Money continues here in 790 KBC. California voters will get the chance to decide whether to roll back a law that has been blamed for rampant theft, especially at retailers. State officials saying the initiative met the required number of petition signatures to become eligible for the ballot and is expected to be certified for the November 5th general election later this month. Proposition 47 we're talking about was passed by voters in 2014. It reduced many nonviolent crimes such as drug possession and property crimes valued at $950 or less to misdemeanors. The current law also allows resentencing for people convicted of felonies for such offenses. With crime running rampant here in Southern California, this is a big issue that's getting a lot of attention. Let's go to Sacramento now, and joining us live, Orange County Republican State Senator Janet Nguyen. Senator, thank you very much for taking the call here, and tell us what we need to know about this important measure being on the ballot in November.
Thank you, Frank. Thank you for having me. What's important is that the voters need to know we need to repeal Prop 47. Watch that ballot initiative, and let's make sure that we vote yes. We need to stop this. The theft and rampant that you talked about, billions of additional dollars that are lost annually to retailers. Us as consumers, we're afraid to go to the stores. We're afraid to go to these malls. We need to stop this, and the only way is to repeal Prop 47. And that's why the ballot initiative, I'm so excited because it did get passed. It got approved and certified by the Secretary to be on the ballot. And so I'm asking voters to pay attention. We need to make this happen. We need to stop this. Let's say enough is enough. Enough of the political gamemanship and protection of criminals. It's now Californians need to be protected.
On the air live with Republican State Senator Janet Nguyen of Southern California. Now, this new measure is called the Homelessness, Drug, and Theft Reduction Act, would change elements of Prop 47. So we want to start the education process on this. Now, while this ballot measure has received approval, there's, we understand, an effort in Sacramento to undermine this initiative already with the various bills there being talked about in Sacramento. Tell us what we need to know about that.
Yeah, so Frank, there were 14 bipartisan public safety bills that got passed through the Senate. I supported them as well. And while those bills are very good and they do fix some of the problems that are needed right now immediately for the retail theft and et cetera, but it's not enough because Prop 47, when it was passed over a decade ago, there's provisions there that has to go back to the voters. So what the supermajority and the governor decided to do is they want to put a poison pill into these bills. And so the bill passed, remember, bipartisan. Now they want to put in there that if Prop 47 passes in November, it will null and void all these bills. And they're doing that to scare the voters, to say, oh, don't do anything with Prop 47 because these are good bills, and if you do that, you're going to just completely null and void the bills that we've already done. That's what they're trying to do, put in a poison pill to scare the voters from voting for Prop 47. We need to do both. Allow these bills to go forward as is, that was voted bipartisan by both the Republicans and Democrats in the state, go as is, and also allow the voters the opportunity to repeal Prop 47.
On the air live with Senator Nguyen of Orange County. Let me point out that the powerful California Police Chiefs Association, Peace Officers Research Association of California say they believe both the legislation that you just talked about and the initiative that will be on the ballot in November are needed, they say, to address the scope of the problems we are facing, and therefore the bill should not present an either-or decision. So we want to make sure people know exactly what's going on here. So thank you for laying it out that way. So as you said, in addition to what was just passed there in Sacramento, you support this Homelessness, Drug, and Theft Reduction Act that would change the elements of Prop 47, correct?
Absolutely. We need to do both. Get the bills passed, and then also to pass the ballot initiative. But what voters need to know that bills can always change. Next legislative session can change it. So let's get Prop 47, repeal Prop 47 in your hands. It's up to the voters, and let's make it happen. Don't get confused with the legislators. Don't get confused with the gamemanship here. Let's protect Californians.
So it should be noted the California Police Chiefs Association and Peace Officers Research Association of California have released a statement laying out their position. They say it's a must-read for all Californians, and they're urging folks to contact lawmakers and tell them to support Prop 47 reform as proposed, as it will be on the ballot in November. Anything else that might stand in the way of this at this point? And we've seen many examples where the will of California voters have been thwarted or somehow interrupted.
Yeah, well, the poison pill that I mentioned, Frank, it also includes on there, I mean, if it passes and it states that it could be null and voided because of Prop 47, it would give the AG the opportunity to go back to this initiative and change the language of the initiative. And that's what happened when the original Prop 47 was passed, is that it was a deceptive ballot title. They called it the Safe Neighborhoods and Schools Act. Is our neighborhood safe right now? No, it's not. Are our schools safe? No, it's not. And so we don't want the AG to rewrite or add in more poison stuff to this initiative. Leave it as is. Move forward with it. Voters, we need your help. We need everybody to say enough is enough. Let's vote on repealing Prop 47.
All right, so that's something we'll be looking forward to in November, and so the final blessing on this is expected shortly, right? So this is what the voters can expect to see, this measure basically reforming Prop 47 on the November ballot.
Yes. We need to stop this rampant of thefts all over the state. We need to put people who are consistently just stealing. Second is we need to make sure that those who need drug rehab get the help that they need. Stop what's happening in California today.
And you, of course, have a front row seat there. You've seen the reports of the rampant retail theft, and of course, this dramatic incident we just had recently, where an auto parts store was looted over the weekend here. So there seems to be no stopping it at the moment.
There isn't any, Frank. I mean, every mall in my district has been robbed. There's not a retail store in my district that hasn't been robbed. Not once, not twice. You can keep on naming it, the numbers. It's at the point where when is it enough? When is it us as Californians going to say, you know what, Prop 47, the deceptive ballot title back then, is not working. Let's change
well, Senator, thank you very much.
Thank you
very much. Thank you very much for laying it out for us, and we'll be in touch with you and keep an open line with you here from Sacramento as this progresses. Orange County Republican State Senator Janet Nguyen, thank you very much for taking the call here this afternoon.
Thank you for having me, Frank.
Thank you very much, and let's get right out to the freeways now on 790 KBC. Folks, people like you and me have our ear to the ground on all things business. We like to be informed and indeed well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833 88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlement, considering you might need long-term care, rehabilitation, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Whether it's motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it, the number to call, 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here, 790 KBC. Good afternoon. The Magnificent One, NVIDIA, moving higher today at more than $4 at $125 and change. Apple, which is starting to get into AI, also moving higher at a record high, up nearly $6 at $213 and change. NVIDIA, of course, had that 10-for-1 stock split recently. Meanwhile, the Biden administration now considering further restrictions on China's access to chip technology used for artificial intelligence, targeting new hardware that's only now making its way into the market, according to a Bloomberg News report. Let's bring in China expert Gordon Chang now. We always appreciate joining us live now, Gordon Chang, who, of course, is the author of The Coming Collapse of China and the Great U.S.-China Tech War, China expert, and on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for taking the call, and tell us what we need to know about this latest report.
Well, the Biden administration probably will impose more restrictions on the transfers of chip and chip-making equipment, chip technology, and this is just one of a series of actions, and we'll probably see even more after this.
All right, tell us with AI, the rise of AI and just about everything, the importance of what's going on here.
Well, China has really dependency on the U.S. right now. They need U.S. technology on AI. They're developing their own, and they do have certain advantages because AI does run, for instance, on data. China is able to collect much more data than we can because it doesn't have the restrictions that companies in a democracy have. But on the other hand, it has government determination, a lot of money, a lot of resources. But they could use American technology, and we still have a much more innovative system than they do. So they're dependent on America.
All right, so how does it work if American companies are doing business in China as they are? Are they simply ripping off that technology at this point?
Well, they are, but right now they're doing it with the consent of the American people. And I think that essentially we're going to see more and more restrictions because China is using that technology, for instance, to improve its weapons, which are been configured to kill Americans. And that is just not only strategically wrong, it's also morally wrong. And that's why this is occurring. The Biden administration, eyeing November 5, realizes it needs to get even further in front of this issue. You know, they started last year, but they realize that they have not gone as far as they need to, not only from a tech point of view, but also from a political point of view.
On the air live with China expert Gordon Chang. Another report wanted to talk to you about. We see another Bloomberg report says a group of 7 leaders will call on China to stop enabling and sustaining Russia's war against Ukraine. According to a draft statement, Ukraine's allies accusing Beijing of providing Russia with technologies and parts in its ongoing war in Ukraine. What about this important report here now?
You know, the G7 is considering imposing sanctions on smaller Chinese banks. The Biden administration was able to get China's larger banks to stop handling transactions of goods that Russia uses for the war in Ukraine. But Beijing just merely transferred the business from the larger banks, which are more visible, to the smaller Chinese banks. The G7 will consider going after the smaller Chinese banks, but it's not at the point where they're willing to actually impose those sanctions. So really, we're going to see warnings out of Italy, where the G7 is going to meet, and then it's a question of how strong Biden wants to be on this. But clearly, I think we've passed the time for warnings. We've given them some in the beginning of the war. China has not heeded them. And so, therefore, it's time for action rather than for mere conversation on the issue with Beijing.
All right. Chinese EVs around the world certainly impacting the auto industry. And I see the European Union now is threatening China EVs with tariffs of up to 38% as China gets set to flood the world with cheap EVs. What about how this is all evolving?
Well, the EU did impose those tariffs today, the 38.1%. And I think we're going to see not only tariffs in Europe, but also in the global south, because a few days ago, Turkey also imposed elevated tariffs on Chinese EVs. The issue, though, shouldn't be tariffs. It should be forced labor, because almost all of China's green products are made with forced Uyghur labor. And that means under the Tariff Act of 1930, as augmented by the Uyghur Forced Labor Prevention Act of 2021, those products should not be permitted to be imported into the United States. Europe has similar rules, not quite as strong, but clearly this is an issue not just of how much consumers pay for a Chinese EV, but the whole issue of forced enslaved labor.
All right, and the other story we're following, which has been getting international attention, authorities working to bring home 4 injured instructors from Iowa's Cornell College who were stabbed in a northeastern Chinese city where they were teaching. Don't usually hear about these kind of incidents affecting Americans being hit by crime in China, but what's your reaction to that shocking story?
Well, the person who stabbed the 4 instructors was apparently mentally disturbed. But the problem here is that Xi Jinping, the Chinese ruler, has been really fomenting hatred of Americans. He has a very xenophobic outlook. So something like this was inevitable. And I think it's virtually inevitable that we're going to see more incidents like this. China right now is not safe for Americans and foreigners in general. So I think Americans should be leaving China because this is just an indication of what is to come.
Gordon Chang, China expert, author of The Coming Collapse of China and the Great U.S.-China Tech War, on an X, formerly known as Twitter, at Gordon G. Chang. Gordon, thank you very much for taking the call on these big stories here today.
Thank you so much, Frank.
Mottek On Money continues, recapping a record-shattering day for the stock market. And for those of you who missed it, my conversation with Ken WINANS will be posted on the Mottek On Money podcast, along with the rest of this program coming up later this evening. The Dow coming in for a closing loss of 35 points, but the S&P 500 and NASDAQ powered up to record highs. The S&P 500 at 46 at 5,421. The NASDAQ up 265 at 17,608. And the yield on the 10-year note at 4.32%. This is Mottek On Money. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon. Mottek On Money, 790 KBC.
The Ed Milet Show showcases the greatest peak performers sharing their journey, knowledge, and thought leadership.
The quality of your life is really comprised of the quality of the questions you ask yourself, because the quality of the questions creates the quality of your thoughts. And so if you can begin to ask better questions in life, you could have a better life. The reason you're not growing if you're not is because you're not looking to ask a better question. And when you begin to ask the right questions, I believe you begin to get the right answers.
The Ed Milet Show is available on YouTube or wherever you listen.